We now come to the 10-minute rule motion, banks, financial exclusion and access to finance. Gareth Thomas.
Madam Deputy Speaker, I beg to move Banks, Financial Exclusion and Access to Finance Bill, a bill to require banks to measure and disclose their performance in reducing financial exclusion, including exclusion from affordable credit, and in improving access to finance for small and medium-sized businesses, to establish a system for rating banks according to that performance, to require banks to cooperate with credit unions and community development finance institutions to address financial exclusion and improve access to finance for small and medium-sized businesses and for connected purposes. At the outset, I should declare that I'm a member of the M for Money credit union. Madam Deputy Speaker, Dal Dillon is a great Coventry entrepreneur. He runs Dillon's Brewery, the Spire Bar and the Sky Blue Tavern, which together are helping to fire up Frank Lampard's growing army of Coventry fans as they push for the holy grail of Premier League promotion. Like many growing businesses, when they wanted to expand, they hit a stumbling block, accessing affordable finance. Their application was rejected by a mainstream bank, so Coventry and Warwickshire Reinvestment Trust, CWRT, a community development finance institution, a CDFI or community bank, stepped in. They're not for profit. They're accredited by the Financial Conduct Authority, they're community-focused, and they take the time to understand the entrepreneur, their business and their ambitions. In essence, they are a proper community bank. Since 2010, CWRT has loaned over £37 million, helping SMEs overlooked by traditional lenders in their communities to start up, to grow and to thrive. Thousands of small and medium-sized businesses, sadly, are locked out of access to affordable credit at the moment. In short, they can't get fair banking. This holds back too many people in too many communities from turning strong ideas for new inventions or new services into more jobs, new high street ventures, or just great commercial opportunities. For the entrepreneur who doesn't have a track record or assets, access to business finance and to financial advice is a huge challenge. Indeed, the cost of business finance in the UK is higher than in other comparable countries. In government, senior figures in one bank told me that the typical business client who received personal sit-down financial advice had a trading income of £10 million or more. According to the Federation of Small Businesses, who are concerned about access to the funding their members need and who are supportive of this bill, nearly half of small businesses recently rated the overall availability and affordability of new credit for small businesses as poor. At the same time, millions of people in the UK don't have access to affordable credit when they need it most either. Over 20 million adults are now classified as financially underserved, a 50% rise since 2016. 1 in 3 adults face barriers to mainstream credit, often leaving them without safe or affordable options. 12.5 million people have no savings to fall back on in a crisis, and almost 2 million have turned to illegal lenders in the last 12 months alone. As the team at the excellent London Mutual Credit Union pointed out to me when I visited last week, to not have fair access to affordable credit can mean having to use payday loans, forcing those who can least afford it to put up with higher charges and interest rates, paying a poverty premium. It means it's harder to save, it's more costly to buy key things like a fridge or to repair a broken boiler. In short, it's harder to pay for life's unexpected costs. The financially underserved don't live far away. They're in all our communities. They're among our families, they're our friends, and they're certainly our neighbours. I welcome the work my honourable and right honourable friends on the front bench have put in establishing again a financial inclusion strategy. This bill seeks to build on that good work. We need to go further and faster if the loan sharks are to feel their opportunities are shrinking, if we're to see credit unions doubling in size and community banks unlocking more of the business ambition in our country, especially in the most economically deprived areas. A Fair Banking Act would require the Financial Conduct Authority to analyse the performance of mainstream banks according to their size on providing equitable access to both credit for individuals and to SMEs. It would create a published rating system that showed which banks were doing well and which less so. Banks could improve their ratings by expanding their own provision of affordable lending to underserved communities and businesses, and also by creating partnerships with community banks, CDFIs. I am not interested in bashing Britain's banks. They are critical to our economic future, huge sources of wealth and jobs for British people and all our communities. But I do think they could do more. There are fair banking requirements in other countries, most notably in the US, where most British banks already operate very comfortably with them. There are, of course, differences between the financial services environment in the US and here in the UK. A UK Fair Banking Act would need to focus here on small business lending and an individual's ability to access affordable credit, and less so on mortgage lending, a key issue in the US. American fair banking requirements mean British banks invest in left-behind communities in the US, investing in and working happily with community banks or CDFIs. Indeed, British banks are amongst the largest investors in US CDFIs. They don't lose money, and there is often joint lending by CDFIs and banks. And they celebrate in the reports they have to publish, for example, their work with women entrepreneurs and with black and ethnic minority businesses. So the question for those British banks is why they won't back such requirements here, why they won't do more with community banks and credit unions in the UK. To be fair, there is some investment in CDFIs from Lloyds and JP Morgan, but it's striking how many other banks invest in CDFIs in the US but don't invest similarly here. Because of the US requirements, British banks are already used to working with the disclosure requirements I envisage in this bill. The majority of the data needed for disclosure requirements under this bill will already be collected by the FCA through, for example, their consumer credit product sales data. So this is not over-regulation. Conservative estimates, with a small c, following detailed research for the Fair Banking campaign, suggest that the requirements in this bill could result, for example, in an increase in the level of annual lending just by CDFIs and credit unions here from an estimated £250 million per year up to £3.3 billion a year, transforming the prospects for thousands of entrepreneurs and financially underserved people in all our communities. There have been some suggestions that the measures in my bill might overlap with existing laws and regulations, including the recent Consumer Duty. Unfortunately, the Consumer Duty only applies to people who are customers. So people who apply to banks and are turned down are excluded from this. There are too no mechanisms or metrics currently in place or being proposed on measuring banks' performance on expanding access to affordable credit as a whole. Specifically, there is no current framework for benchmarking banks' actions on providing affordable credit or on working with credit unions and CDFIs. And there is currently no mandate for banks to expand access to affordable credit, and no incentive for them either to work with credit unions and CDFIs to do so. What the widespread exclusion from credit demonstrates is a major market failure, that current measures aren't working, that voluntary measures aren't enough. The measures in my bill would end that failure. Talent, entrepreneurial talent in particular, exists everywhere in the UK. We need to give that talent the chance to flourish, and more affordable sources of credit are key. And no one in crisis should be forced into punishing levels of debt or worse because the mainstream banking sector has locked them out. I am grateful for the support of the Federation of Small Businesses, Small Business Britain, Richard Marshall of Pall Mall Barbers, the Building Societies Association, ABCL, the Co-op Party, Responsible Finance and the excellent team at Finance Innovation Lab. A Fair Banking Act is a common-sense, proportionate measure which could have transformative benefits for businesses and communities across the UK. And I commend this bill to the House.
Yeah. The question is, does the honourable member have leave to bring in the bill? As many in the opinion say aye. Aye. Contrary no. The ayes have it. The ayes have it. Who will prepare and bring in the bill?
Dame Meg Hillier, Sarah Champion, Liam Byrne, Sarah Owen, David Burton-Sampson, Lloyd Hatton, Bill Esserson, Mr Tamanjeet Singh Desai, Nick Smith, Annalise Dodds, John McDonnell and myself.
Gareth Thomas. Nicely done.
Banks, Financial Exclusion and Access to Finance Bill.
Second reading what day?
27th.
27th of?
February.
27th of February. We now come to if the ministers wish to swap over very quickly.